All right, what is going on, everyone? To all 7,000 plus of you who are returning, welcome back. To those of you who are new and here for the first time, my name is Gerardo. We're going to be talking about HEX in this video. More specifically, could we see $1 incoming? We're going to cover some quantitative and some technical side of things and call it a video. It's been about 3 or 4 days since I made a video for you guys. I took a nice vacation, had some fun outdoors, listened to some music, spent the weekend with friends. It was a long weekend, so I'm recovering now for a few days, but I feel fantastic, much better than before the trip. So just know that I've come back refreshed to give you better content than ever. Now with that out of the way and said, let's look at these charts. So I'm going to show you a really simple technical piece of analysis right here. And that's this, right? We shake it up a bit to show you what I actually am trying to show you. So if you take a look at this recent run and say, okay, what if this rally right here is the pull to a bull flag? And now remember, in previous videos, I was saying how the most bullish thing, in my opinion, is sideways, right? The most bullish thing is sideways just because we've seen such an intense run up. If we actually take a measured move from the bottom of this wick to the top of this wick, this was a 6.24x run up, 524% gains. Now that's quite the run up, and it makes sense to cool off and form market structure, right? It's healthy. We want to see something like what we saw here. And again, I said sideways would be very bullish, whether it's a flat top formation like the one we're currently seeing, whether it's a falling parallel channel like we've seen before. Back here is one example, this is one example, and we've seen it multiple times in the past where you have different sorts of bullish formations, but then again, it turned out to be something more akin to, say, a flat top triangle like we saw back here, for example, right? And then a textbook retest of support. So if we were to see something like that, well, we're already starting to form it, right? We have a higher low here, believe it or not, compared to this low back here. Actually, this more so looks like a double bottom. So that's the interesting part of this. You're sort of stuck between this flat range, right? Between 34 cents and 49 cents. So we've been range bound between, again, about 34 and about 50 cents. So this is pretty interesting because if this were to break to the upside, you see this line I have drawn here, and it's really simple how we did this. And I'll just show you real quick. You take the pole and you place it at the point of breakout. Lucky for us, we have a flat top formation, so the point of breakout is around 48 cents or so, and you see the technical target for this formation is approximately $1 right on the penny. And how did it turn out like that? Well, if you look at this bottom wick, it's about 9 cents, right? And this top wick is about 54 cents. So the difference between those is about 46 cents. So if you just add that to 55, you get $1, right? $1.01. So about $1 right on the penny. And that's our technical target. Now, if we were to double our technical target like we have in the past, you're probably tired of me saying that, but it's because we've done that so many times. I can't even count, and well documented on this channel too, from the 3 to 6 cent range, the 6 to 12 cent range, 12 to 24 cent range, 24 to about 50-60 cent range, which we touched and we've tapped twice. So the more times a level is tested, the more likely it is to break. Not financial advice, just what you'll find in general investing literature, right? Investment 101. And there are reasons for this, right? Because you have people protecting a certain price, blah, blah, blah. I've talked about this plenty of times, but we've already tapped it twice. So if we were to tap the 49.50 cent level again, it's more likely to break than it was back here. For example, back here, you saw we tapped it once, the 6.5 cent level, tapped it twice, a third time, a few more times here, and then we broke. So it was about the third or fourth attempt when we actually broke. And so, right, we had 2 attempts, a third one more likely, a fourth one even more likely. And so our technical target is $1 to $2 by the end of the year. Pretty much, right? This ends up here in November. It could happen quicker, it could happen slower. $1 to $2. Another chart that corroborates with this sort of thesis is our regression rainbow, clearly, which says, what did Ethereum do relative to its mathematical fit. And we get an extension, right? So it's a normalized version of what Ethereum did. So you're able to overlay them both in the same spot. And you see that what came next for Ethereum was this run. It was a continued run, right? And you see that we have a very similar formation to what we did with Ethereum, where we came out of the depths of red into these levels, consolidated for a bit, pumped up in between green and blue. And that's exactly what HEX did, in between green and blue, and actually stopped for a while too. It's well documented in a video, in a couple probably in the past week or two, where I said not only is it healthy to go sideways, and I'd like to see us go sideways, which is what we're doing. I said, you know what, this backs that up too, this model, because this model goes sideways pretty much until September 25th. And I believe I even name dropped that exact date. And what is it today? September 21st. And what have we been doing? We've been going sideways. So if we were to break out, late September, then that would give us room to run up during October and potentially November. So we'll see, right? Nothing is for certain, but that run would take us into the $1 to $2 region. More specifically, pink hits $2 in October, about October 21st, which we like to call our Ethereum fractal, right? We made a video on this, which actually got a lot of views, like past 10K views, the path to $20, which pretty much says if we hit pink again for sort of this double peak that you see visualized here, that would correspond about $2 this October and $25 next May, and anything in between if we were to hit pink any month in between October of this year and May of next year. So both of these models are saying, hey, we could be looking at the $1 to $2 level, and it makes sense if we say what's playing out now is a elongated fractal of what happened back here, where back here to get from yellow to pink, it only took about a month. Whereas here we consolidated around yellow for many months, and instead of going straight to pink, we seem to have a nice little pit stop. And again, the angle of attack is nowhere nearly as sharp. It's a little bent over, which says, you know what, it's a little harder to move this market than it was back here. But nonetheless, it doesn't take too much money to move a market like HEX and send it to these projected levels like $2. And so we see our charts pointed up and to the right, generally speaking. Look at this beautiful adoption chart. The reason I'm bringing this one up is because I recently plotted two things together that kind of blew my mind, and it's the HEX stakers versus the HEX price. If you overlay them, kind of scale them together, you see that they're pretty much the same, right? You see that price more or less seems to follow the number of stakers quite nicely, and you know that number of stakers is pointed up. Not only that, you can look at the rate of change where you have positive slope and new HEX stakers per day, whether that's 300 to over 1,000 we've had on some days, 2,000 here on this day, that new stakers help a lot because you're exporting, right? You're exporting the inflation to the future, and coins that are locked up just simply cannot be sold, right? They're removed from play in a way. And there's one more chart I wanted to look at because it's very relevant, and that's our quarterly ROI chart. Reason being, we are nearly at the end of the quarter, only about 10 days left into the end of Q3 of 2021. Time absolutely flies. Let's zoom in here so you can take a look at this chart with me with a little more detail, and you can see where we currently stand relative to other quarters of HEX, where, again, this is a huge point that I'd like to bring up, which is every single quarter has been a profitable quarter for HEX. I repeat, from its inception to now, every full quarter of HEX's existence has been a profitable quarter. If you had, again, this is just a theoretical strategy where if you had bought at the beginning of the quarter, first day, and sold at the end of the quarter on any given one, and we've had, again, Q1 of 2020 all the way to where we are now, Q3 of 2021, and it looks like we are battling for, second place, right? Our second most profitable quarter to date at this point in time was sitting at around, like 5.4. So I need to turn on compare mode for this chart so you can see all of them at once. It's about 5x, and where we are now is at about 5.1x. So we'll see if we can end up, again, even if we just go sideways, depending on if we end up where we are now or a little higher, we can still be the second most profitable quarter to date. So we don't need to absolutely just keep going straight up in just in a straight line to say we're bullish. I've said multiple times, sideways is bullish after a move up. It pretty much constitutes a continuation pattern if you have something like what we're seeing now, in my opinion, whether it's a flat top triangle, a bull flag with a falling parallel channel, or just a simple range like this, a rectangular range where you have these clear levels of support and resistance. But again, sideways is bullish too. In my opinion, we'll see where we end the quarter. But other than that, that's pretty much the video for you guys. Could we see $1 incoming? Most definitely. It's much more possible than it was in the past, and you could probably sense that, right? Because when you have 1 penny hex, talking about $1 is it's a little far. But when you have 50-cent hex already tested twice, and then you see, oh, that's only at 2x away. How many 2x's have we done so far? 13. What's another one? Right? Appreciate you watching. Check out the website LookIntoHex.com if you want to follow these charts for yourself, or if you want a little more than what you get here with the free videos and the free website, then check out the VIP side of things with our custom trading view indicators, our private hex metrics dashboard with some advanced indicators that look like really good leading indicators. I've shown them in the video, but check it out. I talk a little more about it there, quarterly reports and so on, weekly updates, right? I already dropped 2 of those so far. People are loving it. People are liking it. So go ahead, join the party if you want, or just join the Telegram chat room, which has almost 700 members, or check out the Twitter, which blasted through 1,000 followers, and like a day later is like 1,200. You guys are absolutely crushing with the engagement, so I appreciate that. Let's get to 8,000 subscribers. Subscribe now if you haven't by now. We're ending the video, and yeah, it's good to be back. I missed making videos for you guys, and yeah, I appreciate every single one of you watching. I'll catch you in the next video. Peace.